Hello, everybody. This is Wade Hansen, and I am glad to be back with you again today. It has been 2 weeks since my last presentation, and today we're going to be talking about price patterns. And price patterns are really, I think, one of the most overlooked portions of technical analysis. One, because sometimes price patterns are difficult to identify. The other reason um, is that really it's so much easier, it seems, to put a technical indicator on your chart like the MACD or the CCI or a stochastic, and to watch for those precise entry and exit points that a technical indicator can provide for us. However, a price pattern has the ability to really show us if trends are going to continue, if trends are going to reverse, how far we can anticipate the price moving after it has broken out of one of these patterns, which is something that we don't get with technical indicators. If a MACD crosses up over its signal line from being below its signal line, it tells us that it may be an opportune time to buy the currency pair, but it doesn't give us a lot of examples into how far the currency pair is expected to go on that breakout. And so I'm excited to talk about price patterns today. And I had a question right before the session started from Jack, who said, which time frame is the best for price pattern analysis and trading? Is it daily, 4 hours, or hourly? And I would say that any of those time frames works well for price pattern analysis. Personally, for me, I like to use daily charts, but you can also use hourly charts, 4-hour charts. The only difference is, as you use smaller time frames on your charts, you are going to get smaller price patterns, which tell you that you can anticipate smaller moves once the price pattern completes itself. So really any of them you can use, and I'll be showing a couple examples today on various time frames. And the one we're going to start out with is on an hourly time frame, and then show some on a daily time frame as well. And so you can see how the price pattern set up. Dark Monk just asked, even 5-minute charts. Yep, even 5-minute charts can work. You're probably going to take a shorter term trade if you're looking at a price pattern on a 5-minute chart, but it can help you identify where these areas of consolidation are happening, which really is where most price patterns happen, is at an area of consolidation. And then you can see where the breakout may be going from there. Okay, so I want to talk about some of the basics of price patterns using some drawings of what these price patterns look like, and then I'm going to go in and look in the live market and look for examples of some of these price patterns. And this first drawing that I have here is a drawing of a pennant, and this is a bullish pennant. And price patterns are broken up into two categories. We have continuation patterns and we have reversal patterns. And the names are pretty self-explanatory. Anytime we see a continuation pattern, we would anticipate seeing the previous trend continue after the price pattern has formed. Anytime we see a reversal pattern, we would anticipate seeing the previous trend reverse itself and start moving in the opposite direction after the price pattern has formed. So in this example of this bullish pennant, you can see that it was in an uptrend before it entered the price pattern, which is marked here by the red lines, and we see the trend continue after the formation of the price pattern. Now, what a price pattern really is a visual representation of investor psychology. And I want to say that one more time. It's a visual representation of investor psychology. And I want to walk through a couple of these price pattern diagrams to show you exactly what I mean. Right here, we're in an uptrend. It's coming along, and boom, we hit a level of resistance. Now, as we hit this price point, something happened in the market that caused the sellers in the market to take control from the buyers. As we got to this point, the buyers who had been long this currency pair as it came up said, okay, this is an appropriate level for me to take some profits, and I'm going to sell some of my contracts. At the same point, sellers said, this is a great time to jump in and short this currency pair. So I'm going to sell some of these contracts. And as that happened, the price turned around and started moving lower. Well, here it comes to a support level, and the buyers at this point say, this currency pair has pulled back a little bit. It's time to buy some more of these. And this may be the buyers out there who maybe they missed this first trend and they were waiting for a pullback in the price to get back in. And so they get back in, some of the sellers get out, it pushes the price a little bit higher, but not quite as high. In this example, in a pennant, we always see a downtrending resistance line and an uptrending support line, and they are converging on each other. And what happens is this price gets compressed, and it starts trading in a smaller and smaller, a tighter and tighter trading range. And when that happens, it builds up a tremendous amount of pressure. Imagine you have a spring, and you keep compressing the spring and compressing the spring and compressing the spring. Well, you can only compress it so far before finally it's going to say, enough, I've had it, and it's going to bounce back out, and volatility is going to shoot up. If any of you are familiar with using Bollinger Bands on your charts, you know that when the Bollinger Bands start to narrow and the trading range starts to compress, it starts building up pressure. And the longer a currency pair remains in this compressed trading range, the more pressure is going to build up. And it just gets tighter and tighter and tighter until finally, boom, the price breaks out of that consolidation range and continues to move higher. Now, as it breaks out, right here where I have marked by the letter D, you have a great opportunity to enter a trade on this currency pair. Now, once you have entered that trade, how far up is it going to go? Well, you have a good indication from this price pattern, and that is based on the previous trend. This pennant, or we say, is on top of a flagpole. And so whatever the length of the previous trend was, after the price compresses in this consolidation range and then breaks out, it will most likely move up at least as high as it moved up during the previous trend. So you have a pretty good idea of where things are going to go. Now I want to show you a slight variation on this pattern. And the first one we saw was called a pennant. This one is called a flag. And here the support and resistance lines are parallel to each other. And we're going to look at an example of this in the live market as well today. And you see that it bounces back and forth and back and forth, and all this occurs while the buyers who pushed the currency pair up higher in the first place are catching their breath. Sometimes after you've made a huge run and you're a little uncertain of where the currency pair is going to go, these large investors will take some time out. They'll take a breath and say, let's see what happens. And as they see the currency pair remain up at this upper level, they regain some confidence that the trend can continue. And sure enough, they break it out and push the trend up higher. So this is a slight variation of the pennant. It's called the flag. One more slight variation of this is called a wedge. And in the wedge, you see that just like a pennant, the support level and the resistance level are converging on each other. The currency pair is getting compressed down into a tighter and tighter range. But unlike a pennant, both of these lines are trending downward. They're going in the opposite direction of the previous trend. If this were a bearish wedge, you would see the previous trend would have started at the top, been coming down. The wedge would go in the opposite direction of the prevailing trend, and then it would break back out and start moving lower. So these consolidation periods are where we find all of our price patterns. Price patterns really are consolidation. Dark Monk had a question here. After the break of the trend line, often I can observe price sliding on that trend line. Is this some sliding effect or what? Maybe my eyes. I'm not quite sure I understand that question. If as we're going along, if you could clarify that a little bit, I'll come back to that, Dark Monk. All right. And one more variation of these continuation patterns that we see is a triangle. In this case, we have a horizontal level of resistance and an uptrending level of support. Now, I really like these. These are called ascending triangles, and this tells us that there's this, for some reason, there's this resistance level we just can't break above, but nobody wants to go lower. Everybody keeps pushing up against that resistance level and pushing up against that resistance level and pushing up against that resistance level as the price compresses, and pretty soon it breaks out. So those are the variations that we have of continuation patterns. Now there are 3 reversal patterns that I want to run through quickly. And the first is a double top. And you can see the same thing flipped upside down that would be called a double bottom. The double top, the traders push the price of the currency pair up to a resistance level. They can't make it past it. They come back down. They try to break through that resistance level one more time. It just doesn't work out, and they come down and they break below this previous support level and continue on down. Now, on this breakout here at letter C, you have an excellent opportunity to enter this trade, and you also have some clue of where the price is going to go by looking at the distance between this support level and this resistance level. If you take that distance and add that distance to the breakout point down here, you have a pretty good idea of how far that price is probably going to fall before it finds its next level of support. So you have a price target that is an equal distance away from the breakout point as these support and resistance levels are from each other. Now, sometimes we get a double top. It comes back down to this support level and it doesn't break out. And that's where we get our next pattern, which is a triple top. Comes back down to that support level, rallies up to the resistance level one more time. And if it can't break through that level, oftentimes it comes down, breaks through support, and continues to fall. And again, you can use the distance between these support and resistance levels to gauge how far that price should fall. So you want to watch for a true breakout below this support level. You never want to set your entry points right at support, because so often the currency pair can drop down just below support and then turn around and go up. You want to give yourself some clearance below that support level before you enter your trade. Now, one variation on this triple top is a pattern that we actually have a great example of right now on our currency charts, and we'll look at that in a moment. But that is a head and shoulders top. And you can see this gets its name from having a resistance level up higher here that looks like the head, and on either side of the head we have the shoulders. And as it goes up, hits resistance, comes back down, breaks up through that resistance level, hits a new resistance level, comes back down, but people really weren't that confident that it should have gotten all the way up to the top here. So the next time it tries to rally, it only comes back up to the resistance level that was formed by the first shoulder. Then it comes back down and breaks through and continues down lower. So this is a head and shoulders pattern. And on these reversal patterns or on the continuation patterns, one thing that I do want to point out that is not drawn on these charts is after it breaks through this support level, oftentimes what will happen is it will come back up and retest that support level, which is now a resistance level. So imagine the price comes down, breaks below this support level, and then it turns around and it hits that same level, that support level again, which is now a resistance level, And if it turns back around after that, it is most likely going to continue to fall all the way down. And you have confirmed that you have a true breakout of that that support level. So here's what you do with that. If you are going to set your entry price somewhere below this support level, make sure that you set your stop loss up above the support level, so that if you get knocked into your trade as you hit your entry price, and if it does turn around to retest that support level, which is now a resistance level, you have given yourself plenty of room to retest that level. And if it does retest and goes down, you make a lot of money on your trade. If it doesn't bounce back down off of that new resistance level, but instead breaks back up above it, it probably wasn't the price pattern you thought it was, and so you will get taken out of your trade and saved a lot of heartache of it moving all the way back up to this resistance level. So those are the basic price patterns that we look for. We have, again, continuation patterns, and we have reversal patterns. So now we're going to go in and take a look at some live currency charts and see how we can identify some of these price patterns, because it's really easy to identify a price pattern on a diagram like this that I have all drawn out, where all the lines are nice and clean and the support and resistance levels are nice and clean. But when you get out into the real market, it's never that clean. You do have to use your imagination a little bit and draw some good support and resistance lines. So we're going to do that. So going back to Dark Monk's question, the sliding of the price you can see often on the 5-minute chart, or sometimes at 15 minutes, for instance. Price breaks down through the trend line, goes up a little bit, and then starts sliding on that broken down trend line in the direction of that trend line. In this case, the price slides down for some time, and many times I don't know if it's going to go up or down. In other words, if it breaks that trend line, is it valid or not? Okay. So the price breaks down. Okay, so you're saying, as it, for instance, on this head and shoulders, if it breaks down below here and then comes back up, but then just slowly starts to drift down, and or just slides across this trend line. Okay, I see what you mean. So let's say on this head and shoulders pattern, it breaks down below this support level, and then it comes back up to this support level, which was resistance, and then it just keeps sliding along sideways, sliding along sideways. Well, if you're in your trade, if you did get into your trade because it broke down below and you still maintain your stop loss up above that support level, for me, I stay in those trades that I'm in because I know I have my protection set with my stop loss, and if it does finally end up going down lower, then I know I'm going to make some money. If it doesn't, and it does move up and hit my stop loss, I was comfortable with that stop loss when I first entered the trade, and so I will still be comfortable if I hit that stop loss a little later on. Now, of course, if you're going along and something happens, whether a news announcement comes out or something fundamentally changes, and you say, I'm no longer interested in this trade, I don't think it's going to do what I originally thought it was going to do, then go ahead and exit the trade. But if nothing has changed, it's just taking a little while for the downtrend to resume, then go ahead and stay in that trade. As long as you set a stop loss that you were comfortable with originally, you should be okay. And Deb asked, could a head and shoulders pattern turn into something like a flag or something else? Yes. Maybe not a head and shoulders into a flag. It may be a little tougher for that. But if you had a triple top or something like this, it could definitely turn into a continuation pattern if you never see it break below the support level. And that's one nice thing about these price patterns is one of the best ways to play them is with entry orders, so that you only get placed into a trade if your entry order price is hit. And so in this case, with this triple top, if it came down and it didn't break through support again and started moving back up toward this resistance level where it would be forming a quadruple top, in other words, it would be forming a channel and just going sideways, then you can start playing the currency pair as it's in the channel, or you can set entry prices just outside of the resistance level up top and just outside of the resistance level on the support level on the bottom, and as soon as the currency pair decides to break out of that channel, you get knocked into your trade and you take advantage of the movement away from the channel that is formed. So let's go ahead and take a look at some prices. Now, I want to first, this was 2 days ago on our website, I made a call on the Euro US dollar based on a price pattern that I was seeing. And as you look at this chart, you have a downtrending level of resistance and an uptrending level of support. So it's those two levels are converging on each other and compressing the price of the currency pair. It keeps moving into this tighter and tighter trading range, and again, the tighter and tighter that currency pair compresses, the better it's going to break out once it breaks through either this resistance level or this support level. Now, we all know the euro dollar has been in a fabulous uptrend for years, and so the uptrend before this was the trend before this was an uptrend. And again, to get back to the point of do price patterns work on various time frames, this is an hourly chart right here that we're looking at. So it's an hourly chart of the euro dollar. And so we had a previous uptrend. It starts consolidating into a pennant, which we know is a continuation pattern. And so I said, I see, along with the fundamental aspects that were at play in the currency market at the time, 2 days ago, that this pair, the euro US dollar, was going to break out of this price pattern and move higher. And so let's go take a look and see what happened. This is that same euro US dollar chart, only a little bit later. You notice the resistance level and the support level that we have here, and sure enough, right here, the euro US dollar broke out higher, and it went up straight up for a little bit, then climbed, turned around a little bit, and has pulled back up to near the highs of where it was. And so you can see that in this consolidation range that we labeled as a pennant, because of the downtrending resistance level and the uptrending support level, we saw a great opportunity to get in and buy this currency pair. And what I had pointed out is that you could set your entry price right here at 47, which would give you some room for the currency pair to come up above this resistance level a little bit and come back down if that's indeed what it was going to do. But as soon as it broke out of this level, if you had set an entry point at 147, you'd be up 130 pips right now of breaking along this. Now, an interesting note here is that we are getting another consolidation period, and you can't quite tell where these levels are going to go, but it's possible that we could get another pennant here. So it hasn't developed far enough to say, yes, we are getting another pennant, but it could consolidate here for just a little bit more and then break up higher again. And so as we're watching, anytime we see a period of consolidation, that's when we want to start looking and saying, okay, does this consolidation period match any of the price patterns that I'm familiar with? So Dark Monk on this asked the question, what kind of a stop loss would you use in this time frame? Well, I like to set my stop losses below levels of support when I'm buying the currency pair. So I would probably have, as it broke out to here, I know that this downtrending level of resistance is now going to serve as a level of support, but I would probably put my stop loss right around, I'm going to draw you a range here where I'd put my stop loss. Right in here. So if I had my stop loss right in here, down near where it turned around last time, and I get in here, I have a price projection of at least a couple hundred pips. I'm thinking that before this move is over, it's going to hit $1.50. But it's given me plenty of room to go up. And then when I see it go up like this and start to retrace, at that time I move my stop loss from here to break even. And so I know that if it does come back all the way down, I at least won't lose on the trade. All right. Jack asked the question, is the price pattern's target achievable often or always? I would say often. It does not always achieve its price target. Most of the time it does. I would say probably 75% of the time. So you've got a good 3/4 there. As if it doesn't achieve its price target, the thing to remember is that even though we are using price patterns in our trading to identify our entry signals and to give us those price targets instead of using something else like a technical indicator, we are still using the same concepts of money management and risk management, where we're going to be moving our stop losses up as the price continues to move in the direction that we hoped that it was going to move. And so even if it doesn't reach its full price target, we're still going to make quite a bit of money as long as it moves far enough in the direction that we thought it was going to go, that we can start moving our stop loss up to protect those profits that we do have. And Dark Monk says on this Euro chart, if you look at the 5-minute chart of this, you can clearly see the consolidation. So it would be valid. Okay, Deb asked, how would you project the target for a pennant or a flag? Great question. There are two ways that you can project the target there. The first is you can look at, draw this line here, the distance between the support level and the resistance level when the pennant actually starts to form. So that would be this pole right here. And if I copy this pole and then move it, I can move it over to here and drag this down a little bit. And so I copied this pole and moved it to right here. I'm not sure exactly why it slanted so much. But it gives us a price target right between 49.50 and so the 149.50 and the 150 right there. So that's the first price target that you would want to set. The second price target, if it keeps moving past that level, is this uptrend began, or at least this segment of this uptrend began right down here. So you could extend this pole from where the uptrend began to where the top of the pennant is formed. And if I take that and I copy that, paste a new one over here Let's see if I can grab this. My secondary price target, I'll set this over to the side just a little bit so we can see it here. Secondary price target is up here at 152. So primary target right here, secondary target right there. Now, for me, I'm not banking on it hitting this secondary target because of the fundamental analysis that I've done and knowing that $1.50 is a big, fat, huge round number. And if it hits $1.50, there is going to definitely be some selling, some profit taking on the euro US dollar. Also, the European Central Bank has said that it may step in and intervene at $1.50. So I'm not counting on the secondary price target, but I will go with the primary price target right here, and I do think that we are going to reach somewhere close to $1.50. Then CVJ says, Wade, perhaps a minuscule point. Do you differentiate between a pennant and a flag in terms of closure? Some do, some don't. The current example can illustrate this differentiation well. For me, whether it's a pennant or whether it's a flag, it doesn't matter too much to me as long as I know that it's a continuation pattern. And as long as, if it's in an uptrend, if it breaks out above the resistance level, I don't really care too much if that resistance level was the resistance level for a pennant or the resistance level for a flag. Because some may get pretty close and you're looking at them and saying, okay, are the support and resistance lines really converging that much, or are they almost parallel? Really, it won't matter too much in your trading as long as you get the breakout above the resistance if the previous trend was an uptrend, or below support if the previous trend was a downtrend. The other question I had here was, what is the most popular reversal and continuation pattern? Also, is there any other available other than these? Yes, there are more price patterns than the ones that I have outlined here. These are the ones I wanted to start with because they're the basic patterns. There are lots of resources out there, books, websites, different places where you could probably find some more price patterns. The most common continuation patterns, I would say, are triangles. The ascending triangles or descending triangles. And reversal, the most consistent one is a head and shoulders. If you see a head and shoulders, it's probably going to play out. So that's what I'd look for. Boyke asks, who originated price patterns? I don't know. I'm really not sure who I could tap and give credit for that for. So let's. All right, sound should be back. Sorry, I bumped the mute button on my my microphone here. So sorry about that. I got excited about looking at this head and shoulders pattern on the pound yen. Started moving around my desk, and here we go. So let's draw a couple lines here. The first one we're going to draw, we call the neckline. That's the support level. And we've got a shoulder right here. Got another shoulder right here. And we've got a head right here. So you'll notice also that right here as the currency pairs come down to the neckline that it's gone through here a little bit both times. So really we have this support range right here. It's not a precise support point, but it is it's a support range. The time frame that I'm looking at here is a daily chart. So this is a daily chart of the pound yen. The one we were looking at on the euro dollar was an hourly time frame. So again, these price patterns, they work regardless of what charting time frame you're looking at. So let's draw a couple lines here for fun. There are two projection levels that we have on a head and shoulders. The primary or first projection level is the distance between the neckline and the shoulder. Now I'm going to put this at the top of this reversal range here just to be conservative. I find it never hurts to be conservative, because if you can be conservative and the trade still looks like a good trade, it's going to be a really good trade if things happen not so conservatively. So the first price projection based on that line, and I'm going to put it below this range here. If the pound yen does break down below this level, there's an excellent opportunity to set an entry price right here at about 220. If it breaks down below here, hits 220, this pair could go down a long ways. As we see here, could come down to 206. That wouldn't be too bad, making all the pips from 220 down to 206. I could handle 1,400 pips on this one if it moves. And you look across back here, that projection level lines up precisely with this consolidation range here, where we used to have some resistance. It broke up above it, used that level of support for a little bit, and then proceeded on in the uptrend. Well, the head and shoulders tells us that we're probably going to see a reversal of the trend, and so we could look at it dropping all the way down to here. Then the second projection level is based on the head, the distance between the head and the neckline. So we draw that there, make a copy of this, paste it, bring it over here, and I'm going to have to move the chart a little bit. Oh, imagine if this retraced all the way back down here to 196. That'd be quite a move. And again, we can ride it all the way down if it does break down using our trailing stop. And I say trailing stop not as an automatic trailing stop that you say I always want to trail the lowest price here by 50 pips or whatever. My trailing stops are manually adjusted. I like to look at where the chart's going, identify those levels of support and resistance, and keep, in this case, I would keep my trailing stop loss above the nearest resistance level. So you could trail it all the way back down. Let's see if we can, nope, not going to let me zoom out anymore on this. But I'm going to switch to a weekly chart here so we can look back and see what this level here at 196 lines up with in the past. So you look here, and sure enough, that level of 196 lines up with what was support at this point here between 2004 and 2005, and served as resistance in 2003. And strangely enough, or maybe it's not so strange, that it lined up as the resistance level in 99 and the support level in 98. So you can see that this dramatic movement isn't unheard of. The pound yen has moved much farther than that since this trend began in late 2000. And so having a reversal back down to this consolidation level wouldn't be out of the question. Now, it may take all of 2008 to get there, but I'm guessing it would probably be a little shorter, seeing as how the down movements on this pair have usually happened a little faster than the up movements. So again, when I first identified this chart, we were looking at the daily chart. This is a weekly. Go back to the daily so we can zoom in a little better. So there's our head and shoulders. We've got about 5 minutes left here, and I've got a few more that I wanted to run through. We've got a nice descending triangle on the Aussie dollar. Now, this one has already broken out. If I were to draw that level here, no, it's not going to line up. Draw this level here. You can see that we have this nice descending triangle, and the time frame on this chart is an hourly chart. So we've gone back from a daily on the pound yen to an hourly chart here on the Aussie dollar. And Boyke asked the question, why do patterns repeat? And it's because, like we were talking about at the beginning, these patterns are visual representations of investor psychology. They're just showing you what is going on in the minds of investors as they get to these various support and resistance levels. And so as you see these things happening, we as investors are very susceptible to patterns. We react the same way to similar situations because of who we are, our emotional makeup, everything else that defines us as an investor. And so we don't change too much as investors. And so as we see these similar types of situations out there, like resistance levels that we're approaching and we feel like taking our profits, or like retracements that we see, oh, I can jump back into this currency pair that I missed out on the previous movement and get back into it. We see all those things, and we can we react the same way to them, and so we see the patterns over and over and over again in the currency market. What is the percentage of completing patterns? I'm not sure of what ones actually complete, because that's so hard to define on your chart. There's too much subjectivity there, I think. But for the ones that have completed and have broken out, I would say about 75% of the time you're going to have a successful trade. Now, on this example with the Aussie dollar, you see an example of what I was talking about when we were looking at the diagrams of the price patterns, and that is a retracement and test of this level. It broke down through the level of support, and then it turned around, came back up to it, tested it just to make sure that that level was going to hold steady, and then it turned around and is continuing lower. Now, why do I show you this? It's already broken out, and you're saying, well, okay, I already missed this trade. It's already broken out. Well, as we've been talking about this and setting our projections, if we take this widest point of the triangle, copy that, paste it, move it over here, put it there, move this chart up a little bit. Have you missed the trade? Or could the Aussie be coming down all the way down below 84.50 in the next few days, the next week? And could you take advantage of that? What would your risk ratio look like if you got in right here where the current price of the currency pair is? You set your stop loss up above this resistance point to give yourself some cushion, and you set your profit target down here based on where you saw the price pattern forming. That almost looks like a 2-to-1 risk-reward ratio. It's not too bad. And want to look at a couple more here. And one actually that I talked a little bit about today on our website, but if you look at the dollar yen, you can also see similar action of this consolidation. And it's broken out here, but again, if you look at the price projection, it's still got a ways to go before that pattern is completely played out. So have that descending triangle on the dollar yen. One more that I wanted to look at was the CAD pair. And I wanted to show two patterns here. The first is the one that we're in. And this is one where you could say, okay, is this a pennant or is it more of an ascending triangle because the slope of the resistance line isn't quite as steep as the slope of the support line? And in the end, tomato, tomato, doesn't really matter what you call it, as long as you get the breakout that you're looking for. And on this one, we got a breakout. It went up, came back, and retested, and then has turned around and started moving higher again. So again, the importance of when you set your entry point, set your stop loss somewhere below that resistance level that is going to serve as support as soon as you get the breakout. And looking here, how wide that is. Move that over here. We've still got some room to go before this one plays itself out. Everybody has been anticipating that the dollar CAD was going to move all the way back up to parity, and it looks like it is. It's taken a little while to get there, but it looks like it is. I wanted to show this pattern as well. I've tried to stick mostly with patterns that are happening right now, because oftentimes people say, oh, well, sure, it's easy to go back in time and identify patterns that have happened. But in this case, I felt it was good to show this pattern so you could see how it did complete. Here we have a bullish flag. The previous trend was an uptrend. The flag moved in the opposite direction, and then it broke out and moved higher. Well, looking at this, and looking at the width of the flag, I take that, I put it on the breakout. Sure enough, that price pattern completed itself easily. It went up a little higher, and if you want to see something else fun, if we base it based off of the beginning of the trend, which I would say is right down here, to the top of the flagpole, and we take that projection level, that puts us up here at $1.10. So, you've got, as you look back in the past, don't feel bad and say, oh, geez, I've missed all these price patterns. They are of no use to me anymore, because they're not. They can still be of use to you. If you break up above this level right here, you have your next projection level of where this currency pair may likely go based on where the price pattern that happened 2 weeks ago said it could go. So you can go back in the past and look at some of these price patterns, identify them, and say, great, we've got this area, this room to grow. I've ran over my time here. Does the same principle work in all time frames? Yes, it does. Price patterns work on various chart time frames. Whatever one you're used to looking at, look at it on that chart, but also look at different time frames to see if you can identify some support and resistance levels that will help you on the time frame you're trading. Boyke asked, why does the price always test? It doesn't always test. You can see when this flag broke out down here on the CAD, we had no retest. Here on this pennant or ascending triangle, we did have a retest. So it doesn't always retest, but sometimes it does. That's why it's important to set your stop below the breakout level. And then the last question, Ray was asking for my view. The large banks and hedge funds also read the charts and know what investors will do and run stops at the appropriate time. I don't think that there is a lot of individual stop running from your dealer, but people who, like large institutions, if they see a nice round number like parity or 9,900, yes, they will try and move and see what happens when the price reaches that level. No one bank out there is going to move the price, but they will be watching to see what happens when the price hits that level and starts activating those stops. So I'm going to end the audio and visual presentation portion of the presentation right now. I'll stay around on the chat boards for a minute to answer any questions. I hope this has been helpful. Price patterns are a great way to get some trading ideas and to really see how you can project where you think a currency pair is going to be going. So thanks for giving me your time today, and I will be back next month with some more presentations and look forward to seeing you there. Good luck in your trading, and for any of you who are celebrating Thanksgiving tomorrow, happy Thanksgiving.